Okay, so my investment goal now, having been investing for the last 30 odd years, it hasn't changed a great deal over that period of time.
I want to have a comfortable lifestyle for myself and my husband.
Making sure that my kids can finish up with their education.
Trying to put money aside for tuition fees for them.
And maybe looking to start them off on the housing ladder.
I'm looking at the goals not just for myself, but of my whole family.
And hopefully that encourages them to start investing on a regular basis as well. So if I'm looking at how my portfolio is constructed today, it's all about getting an investment return, it's about growth.
I'm investing for the long term, so I'm in quite volatile assets.
It's making sure that I've got a sufficiently diverse portfolio that I haven't got all my eggs in one basket.
I have some assets in emerging markets as well as more mainstream markets.
Balance my risk out in support of my overall objective, which is growth.
The beauty of ISAs is that the investments that you make into them can grow tax-free, and the dividend income can be reinvested, and you can access that money at any time.
So I'm quite far up the risk spectrum, but I feel I can afford to do that because I'm investing for at least a 10-year time period.
How would I judge my risk level? Now that's really difficult because I'm a motorcyclist. So from my perspective, I take a higher degree of risk, but look to my portfolio to diversify itself so that I can balance that risk out.
My own personal risk level is super spicy. It's the Vindaloo end of the scale.
You've got to take some risk. Lots of people say to me, cash is a low risk investment. It's not, it's a really high risk investment.
I'm investing for the long term, and I think over a 10 to 15 year window, I'm comfortable taking the risk.
The stock market would have given you a really good rate of capital growth plus the dividends, which would have been reinvested. So there's this kind of reckless caution of a lot of investors. They think the stock market is too complicated and too difficult for them. It's not as hard as you think. You don't know until you've had a go.
Okay, so ISA picks for 2017 for me, I like the look of the UK opportunities around the marketplace. So I've selected the Schroeder Recovery Fund to cover that area off. But looking at commodity markets, there's still great untapped value in that marketplace, I believe. It could be volatile, but for me, I would use an ETF that tracks the commodity market this year.
Actually, in 2017, I'm keeping it really simple. I'm investing in passive assets, which have very low fees, and I'm investing personally in the Vanguard Life Strategy range, where I'm getting an expert to do it for me at low cost. They can keep an eye on it. I'm building and founding a new business this year. I haven't got time to keep my eye on markets day in, day out, so I'm going for the low cost, low maintenance approach.